Hello, welcome back to my YouTube channel. This is Aishwarya. So we are going to see the meaning of debit and credit in this video. So which is a basic foundation of double entry system. So in double entry system, what happens? You have to balance the accounting equation. So what's the accounting equation? Assets is equal to liability plus equity. So in a double entry system, every transactions will hit at least two accounts, which of that one will be debit and the other one will be credit. So based on that, this equation will balance. So if you see, you can imagine a beam balance or a what is this seesaw. Okay, so where both the side has to be equal, that is when the beam will balance. So if the asset increases, this side, the liability or the equity should also increase. If the asset decrease, this side it is also decrease. Or in a few instances, one asset may increase and the other asset may decrease. So then again it will maintain a balance. So that is how it works. So for that, the debit and credit is very important. So what is debit? So debit is usually recorded in the left side of an account. So if you see, the account, any account will be in a T format like this. Okay, so this side it will be the debit, this side it will be the credit. Okay, so when will you debit? So any increase in asset or increase in expenses, that will be debited. Okay, or if there is a decrease in liability, decrease in equity or income, that will be also debited. So you can see this as vice versa. So any increase in asset will be debited, decrease in asset will be credited. Okay, increase in expenses will be debited, decrease in expenses will be credited. Likewise, increase in liabilities, equity and income will be credited, decrease of the same will be debited. So initially you just try to memorize these concepts. As and when you start dealing with transaction, you will understand how it works. So basically there are 5 accounts, main classification that you have to consider while writing the entry. So assets include all the cash, bank, your inventory, investments, building, machinery. All these are assets that the business own. So assets basically will have a debit balance since it is debited. Okay, and liabilities, all the liabilities will be credited. Your loans, your accounts payable, the creditors or the bank overdraft, all where the company owes money will be credited. And then comes the equity. Equity is the owner's fund or the retained earnings. So equity will also be credited because it is also like a liability towards the owner, because if the company is winding up, the capital shall also be repaid to the owner, right? So but it will not be mentioned under liabilities, it is mentioned separately as equity, okay, capital, but it will also be credited. Next, all the incomes that the company receives, it may be sales, it might be any fees, or it might be rent, commission, dividend, all such accounts will be credited. Okay, and here the expenses, all the rent, salaries, utilities, and other expenses like commission paid, wages paid, whatever the company incurs the expenses will be debited. So this basic understanding should be there. A small way to remember is debt. All the draws, the drawings, the expenses, then increase in asset, okay, will be debits. The other stuff like liabilities, equity, income increases with credits. It's just a small trick to remember that. So if the asset increases, it will be debited. If it decreases, it will be credited. Just get to know this. Again, liability, if it increases, it will be credited, decreases, it will be debited. Equity or the owner's capital, if it is increases, it will be credited, decreases, it will be debited. And income or revenue, if it increases, it will be credited, decreases, it will be debited. Or all the expenses, if it increases, it will be debited, decreases, it will be credited. Okay, so this also you should know what comes under assets, what comes under liability, what are the incomes. So if you know that exactly, you will be able to credit and debit accordingly. Initially you just try to understand this. Okay, then one more way of remembering is the golden rules of accounting. So here basically what happens, all the accounts are classified into three main categories. So personal accounts, here all the personal accounts like the company accounts, all the real personal accounts, firms, banks, companies, everything will come under this. Then the real accounts, all the assets of our properties of the business will come under this, like cash, furniture, machinery, buildings and other tangible and intangible assets. Then comes the nominal accounts. So nominal accounts include all the expenses, incomes and gains. Okay, so all the salaries, commission, interest earned, or all the expenses that is paid, that will all come under the nominal account. So if you see for the personal account, it will be debit the receiver, credit the giver. It's like a rule or the formula that you have to remember. And then for the real accounts, it will be debit what comes in, credit what goes out. For the nominal accounts or the expense and income, it will be debit all expenses and losses, credit income and gains. So with an example, we can see that. Paid cash to Raj. So it will be Raj account debtor, Raj's account will be debited, cash account will be credited. Now how do we do this? Raj is a personal account, so debit the receiver. Okay, he is receiving cash. And what is going out of the business? Cash. Cash is a real account. Credit what goes out. So it will be debit the receiver and credit what goes out. So you can frame a journal entry based on this. Then bought furniture for cash. Furniture account debtor, cash account creditor. Okay. So furniture account, that's an asset. So it comes under real accounts. Cash is also as an asset, that also comes under real account. Simple. Debit what comes in, credit what goes out. So when you buy furniture, furniture comes in, so you will debit that, and what goes out? Cash. So you will credit that. I hope it is easy and simple. Next, paid rent in cash. So rent is an expense. Expenses come under nominal accounts. Okay. So debit expenses and losses. So rent account debtor. Then cash. Cash is a real account. Under real account, credit what goes out. So when you are paying, cash goes out, right? So rent account debtor to cash account debt creditor. So cash account will be credited. So this is a simple example. Okay. Now let's see some examples. So it's about Bright Bakery. So transactions that happen in a bakery. So the owner deposits 10,000 of her own money into the bakery bank account. So here what happens? What is coming in? Cash is coming in. So it is coming in the form of capital. Okay. So cash is the asset. Increase in asset has to be debited. And owner's capital, it's equity. Equity has to be credited. Right? Then buying equipment with cash. Okay. So equipment is an asset. So asset, there is an increase. So equipment will be debited. So they are buying it with cash. There is a decrease in asset. So cash will be credited. So debit what comes in, credit what goes out. Okay. Then taking out bank loan. So what is coming in? When you take out a bank loan, cash comes in. The asset increases. The cash in the company increases, right? So cash will be debited, and loan payable, it's a liability. So liability will be credited. So bank loan is a liability, right? So it will be credited with the same amount. You have to make sure both the debit and credit amount should be same. Then selling bread for cash. Okay. So when you sell, what happens? Cash comes in. The asset portion increases. Okay. So we will debit cash. Then sales revenue. This is an income. So income has to be credited. Okay. Now paying monthly rent. So rent is an expense, nominal account, right? So expense has to be debited. Now when you are paying rent, what happened? Cash goes out. There is a decrease in asset. So credit what goes out? 800. Okay. So cash will be credited. So here you can see a T account example where debit is in the left, credit is in the right. Okay. So we can see owner investment, increase in cash. Okay, bank loan also increase in cash. Then equipment decrease, it has been credited. Bread sales again increase has been debited. Paid rent decrease has been credited. The difference 11,400 is the cash balance. Okay, so that will have a debit balance. So common beginner mistakes. So few assumptions people make. Debit is bad and credit is good. So nothing like that. So when an asset increases, that also we debit, right? So when company buys some assets, that is debited. You cannot say that is bad. And when there is an income, okay, it is credited. Or even the loans, all the liabilities are also credited. You can't say credits are always good. No, you cannot generalize like that. So based on the transaction, you have to find out what to debit and what to credit. They are just neutral terms. Now, confusing bank language. Yes, this I have always come across. So if you see a bank statement, when you withdraw money, it will be debited. And when someone pays money or when you deposit money into your account, that will be credited. Okay, it will just happen the other way around. Why? Because that is your account in the books of the bank. Okay, bank is liable to pay you money when you deposit money with them. That is why when you deposit money, it is credited to your account. Okay, so you have to see this from the bank's perspective. Then the balance rule is very important. Debit is always equal to credit. If that doesn't happen, your end accounting equation will not balance. So you should not forget the balance rule. And then the golden, initially it is better to understand with the rules, okay, until you know what is debit, what to debit and what to credit. Okay, then you can do the transactions on your own. Don't mix up the balances. So quietly let's wind up. So debit is the left side, credit is the right side. What all you will debit? Increase in assets and expenses, decrease in liability, equity, income. Credit, it is just the other way around. Increase in liability, equity, income will be credited. Decrease of assets and expenses will be also credited. So debit is always equal to credit. Okay, then remember dead, draws expenses, assets increase with debits. So with this we've come to the end of the video. The same video is also available with the Tamil explanation. Description, the link will be given in the description. If you have any doubts, do let me know in the comment section. See you in the next video. Until then, bye bye.